Hello, Mads, Chris. How are we today?
Good. How are you?
I love it. I'm glad you guys are here. I figured we'd start with a bang and then back into light intros and then the debate. So, Mads, how much equity do the founders of Dixa still own?
Yeah, so all founders, and thanks for having us on the show here. Looking very much forward to the discussion. So founders and early employees and existing employees is around 50% today.
50. And Chris, what about Wistia?
So we used to own less because we raised a few rounds of angel funding, and did that early, and then it did a buyback in 2017. So we own the vast majority of the business.
More than 90%?
In that range, yeah.
I love that. Okay, guys, quick overview. Mads, you're playing in the customer support space. What are you building?
Yeah, so Dixa is a next generation customer service platform, also adopted the customer friendship platform. We have built a unified platform in a conversational way, being equally strong across all communication channels, and also unifying data, workflows, and everything into one. So you don't need 3, 4, 5 different solutions in your stack.
And Chris, you're playing aggressively in the video space. What's Wistia working on?
We're a video marketing platform. So tools to make video, manage it, syndicate it. We have podcasting tools. Like, the idea is that you shouldn't have to be technical. It should be really easy to get value out of video. And that's what we try to help people do.
Adam Klinkett in the audience liked my first question. He says, that was savage. It's going to be a fun debate. It's going to be friendly. It's going to be a friendly but fun debate. So guys, if you're joining real quick, I'm curious to get a sense in the audience. How many of you guys are bootstrapped versus raised? Just type bootstrap versus raised in the chat real quick so that Chris, Mads, and I can take a peek, get a sense of where the lines are drawn in the sand here before we move forward. So Chris, tapping into your background here, when did you guys launch Wistia? First line of code written?
We started in 2006. And, it took us about a year to focus on helping businesses use video. But yeah, it's been a bit.
Mm-hmm. And you hit your first $1 million in revenue in what year?
I think that was probably 2009.
2009.
Yeah.
Great. And Mads, same question on your end, just so we can compare here. When did you launch and when did you hit first $1 million in revenue?
Yeah, we launched in January 2018 after being in stealth and kind of early adoption in Scandinavia in 2017. So it took us 1 year to reach, or 10 months to reach 1 million.
I love that. People, they play games with the growth rate. What growth rate once you raise VC? One of the easiest ways to juice growth rate is to just say you launched later than when you actually launched, and then the revenue today looks way more impressive, right, Mads? That's a good game to play sometimes.
It is, but that's another story about a super complicated platform. So we actually bootstrapped in the beginning, but we'll get back to that maybe.
We'll get back to that in a sec. Greg Dawson in the audience saying I'm bootstrapped. Stefan saying bootstrapped. Jonathan bootstrapped. Completely bootstrapped. Mads, you have your work cut out for you, man. Bootstrapped from Subhan John, Jeremy bootstrapped. Chris, well, yeah, I'm going to throw my support then. I'll argue Mads' side for this case, and I'll throw my support that direction. But take us through. So Chris, you had a really interesting history here because you were able to course correct when you realized it wasn't a good fit. Right. So take us through what happened at Wistia. You hit your first $1 million in revenue. You raised 1.7 million in 2 tranches from angels. Then what?
Yeah, then we started scaling. And as we scaled the business got bigger, which was great. We hit about 10 million in revenue with 3 million in profit. And the advice I got from everyone was, if you have 3 million in profit, you are probably screwing things up because your market's probably growing much faster and you should throw everything at it. And so because we'd saved some cash, we started investing like much more. And from the outside, it looked like it was working. Like, we hired more people, we turned on more projects, we did all these like different things. But the inside, what I learned is that we slowly were losing focus. And we lost the ability to ask a simple question, which is, when you're doing something new, is there something that you should stop doing before you do that new thing? And if you don't ask that question, which is like a classic bootstrapping question, like, you got to focus. When we were running in the mode as if we'd raised money, we just like ended up with like zombie projects, and we ended up with actually great people working on crappy things. And eventually that takes a toll. It slows the whole business down. You can't take the same types of risks. And mentally, running at a loss versus being profitable had a huge difference. I didn't really realize how much it was going to force us to become short-term focused instead of being long-term focused. And so when it was easy, when we were profitable, to do really creative things, invest a lot in the brand, make lots of content, build things in the product that we really believed in, and we thought it would solve something that, you know, was like aligned with what our customer wanted, but they hadn't actually exactly asked. Suddenly we were only doing things that we thought would like drive growth the next month. And we lost some of the magic. And then we ended up almost selling the business and deciding not to, and realizing that the reason we didn't want to sell is because we'd try to rebuild the company if we sold. And that seemed pretty stupid. And we're asking the question,
hey, Chris,
why do we
just to be clear though, because
Yeah.
you said this in a beautiful way on the show, like when anyone is looking at selling their business, a good question to ask yourself is, once you get all this money, what are you going to do with your life?
Exactly.
And
Yes.
when you did this, you said, well, we would do the same thing.
Yeah, I mean, it was like my co-founder and I were literally sitting there, like, all right, we've done this together a long time. We love building a company. Like, we're going to build another company. All right, what space is it going to be in? Well, we know the video space really well. Like, parts of it have moved quickly, but parts of it have moved slow. There's a huge amount of opportunity. Video space is what we know. That's where you go through the list of stuff and you realize, wow, we're going to rebuild our brand. We're going to rebuild all these things. Why do we feel like we need to rebuild it? And that's where we realized that we were actually, it wasn't as fun to run the business anymore. And we lost some of the things that we felt like had like been the magic powering the company. And so
And that
we
offer,
thought,
Chris, that acquisition offer was 2018 or 2017?
2017.
2017. Okay.
Yeah. And then what we realized at that moment was like, okay, we're going to try to fix these problems. And then actually, if we sell the company, we're still gonna have to try to fix them. The people who are going to benefit are the people who bought the company versus us. So we got excited about fixing the problems ourselves. And that meant not selling, but we had raised angel money. And we also had been giving options to folks because I thought we'd sell the business. So to realign everything, that's what caused us to raise debt. So we raised 17 million in debt and did a tender offer, which meant that our investors could get a return, employees could get a return, and ultimately we could be empowered to build the business the way we wanted to build it, but we'd be forced to be profitable to do that. And we actually thought being profitable would force us to be more long-term focused. And we thought that would allow us to take more creative risk. And that would actually lead to a better business.
Mads, we're coming to you in a second talking about valuations, but Chris, being Bootstrap, is obviously focused on profits. There's no equity story that he has to necessarily tell. Chris, you did that deal in 2017, 2018, and you told me something magical happened to your profits after you did the tender offer and you established profit sharing. We're going to leave that as an open loop. We're going to come back to that in a second. Mads, let's go over to you. When did you raise your first round of capital?
So we raised it in December 17. So just before we launched the product globally, it was a seed round, $1.5 million from an early stage VC in Denmark. So that was our very first capital from outside. Otherwise, we were bootstrapped.
And was that on a cap, Mads? Was that a cap or price round?
That was on a price round, a classic thing. Yeah.
Okay. And what was the valuation on that 1.5 million?
I was around $10 million back then. So that was very early days and, almost pre-revenue, right?
Yeah. And take us forward. So what happened next? You've raised more capital since then.
Yes, definitely. So after launching globally, things went pretty fast for us. We had a lot of inbound coming from all over the world, and we got really strong in the Nordics and UK. So already after summer, I've only been officially a CEO in the company for 6-7 months. We got approached from a lot of VCs. We were not in need of money. We could probably go another year. We were about 30 people or so, many of them engineers. And then it almost like, landed a term sheet 1 week after. And we kind of got into, the whole idea of scaling fast. And we could see the growth continuing. We could see us reaching beyond the 1 million ARR at the end of the year. And then all of a sudden, we were actually in this interesting chaos and also a very attractive process. So we closed a $14 million round, 1.4, and we had a number of good options, but eventually we ended up with a very operational VC, Project A Ventures out of Berlin. Really have been a tremendous partner for us during the journey, and probably that was also why we took the round. To be honest, we found we had a lot of pain points. We had grown from 10 employees to 50, 60, almost 10x our revenues. And we had a lot of scaling problems.
So revenue, Mads, in 2019, revenue was about what run rate?
So in 2019?
Yep.
Yeah, there was a $4 million ARR. So we 4x'd it from 18 to from 18 to 19. Yeah.
So you did the $14 million round right around that time, and then you did another large round, a $36 million round last year in 2020. What was that cash for, and what was the valuation on that round?
So we talk about ranges, right? So the valuation is somewhere between 100 and 200 million dollars pre-money, and I would say that the money were very much earmarked for product engineering, the growth into our product platform. It is a big task, and also the reason why we were very much bootstrapped the first 2 years just to build something that worked, just a little bit. We are challenging 3 different industries: the call center industry, the ticketing industry, help desk, and also all the messaging parts. So we knew this is a journey where we need to fuel a lot of investments into our product and platform. So that was the $36 million from Notion Capital as lead was more or less earmarked for that part of the journey.
North of $100 million valuation. It sounds like you're targeting a capital raise this year as well. Before we go to that, let's flip back to the other side. So Mads, I assume you're not. Your board would hate you if you were profitable, correct?
Probably, yeah.
Yeah. Chris, you love being profitable. So
Love
what happened to profitability in 2018 after you gave employees incentives?
Yeah, basically 2017, we would have been on track to lose about 3 million, have negative EBITDA of 3 million. And midway through the years when we made this decision. And so we ended up with negative EBITDA of about $500,000. And then in 2018, we had EBITDA of 6 million.
Yep. And what will revenue be this year, revenue run rate, or now?
It's about 60.
And how much do you think you'll take to the bottom line?
A very healthy margin, similar margins. That's all I'll say. But yeah, I think we introduced profit sharing. And the idea was after we did this buyback, we want to align everyone to like one thing. Like we need to be profitable to serve the debt that we raised. The company needs to be profitable. The team needs to understand that. One of the questions I get a lot was like, well, was that stressful? And it was stressful, but it was also confusing, I think, to a lot of folks on the team because it's not every day that you raise debt to do something like this. And so it was like a tumultuous time right as we did the deal. I was feeling good, but I quickly discovered the team was not. And then within about like 4 or 5...
Why didn't they feel well?
Because I think people were afraid the debt sounds bad. There's not a lot of use. If you haven't bought a house and had a mortgage and, understood how that works and like, that you shouldn't have a mortgage that's like the same as your income and all of these like things, it can be scary. And so it was confusing. And we had about 4 months where there were people who were leaving because they got a payday. They didn't want to be here anymore. People were just really uncertain in the business. And then suddenly we got to a place where everyone who was in the company, every team member wanted to be there for the same reason, was excited about the same thing. And that is when the magic of like the focus came in. Yep. And suddenly, we always have disclosed our financials to the team, but we would disclose the financials on a monthly basis. And before we'd say, are there any questions? And it would be crickets. And then after this, let me tell you, once we did profit sharing and introduced this stuff, any questions? Half the hands are up. And it's like, why are we spending so much on gross margin? Why is this problem over here? We have 2 offices. Do we really need 2? All these types of things. And so the reason we got to be so profitable was not because some magical thing I did. It's that the team owned it and we figured it out.
Mads, if we go back to you guys, I'm going to reset the room. We've got about 5 minutes left. I see great questions coming in via the chat. Ken Carter will get to yours. Carolina brought up a good point in terms of profitability versus going public. Stefan also brought up a good one. He said, if I sold, I'm definitely not going through another startup again. I'm going to relax on a yacht somewhere. Right, Stefan? 45-foot or 60-foot yacht? You tell me.
That's always the question.
That's always the question. So Mads, going back to you, right? Look, the debate between bootstrap versus VC path is all this. The income to the wealth generation for the founder comes at different times, and the bootstrap is sort of more guaranteed because there's profits you can pay out every single quarter, month, year. You're playing a long-term game. Maybe you end up selling for $1 billion and then you're way richer than Chris, but maybe Chris is happier because he had income the whole time and he's living a great life. So this is the dichotomy that founders are struggling with. So help me understand in your shoes, what sort of story do you have to tell this year to go out and successfully raise a $60 or $80 million at an up round and not a down round?
Yeah, that's a really good question. I think, of course, the continued growth, showing the healthy metrics, going through a very difficult year, 2020, where we more than doubled our revenues, and went into verticals that needed our platform and solution. I think that's a very important story. Having clear product differentiators, showing clear customer value into, for instance, in video with this year and many other verticals, food, groceries, gaming, and so on and so forth. So, and one big thing for us, of course, is our US expansion as we are doing as we speak is a very, very important part of our journey. There's no doubt we are in an industry, if you include Salesforce CRM side of things, $300 billion. It is a big boys league. You need to invest heavily in go-to-market, product, and make things work at the same time. We're doing that. We are up against some interesting players, some big ones, and some more legacy, I would say, driven companies. So the opportunity is huge, and I would love, to be honest, to have bootstrapped more. But very early on, we realized that this journey, we need a lot of help and support, but we also need a lot of capital to invest into both product engineering and the go-to-market model, which is expensive, capital intensive.
We just saw a deal 3 weeks ago where Reflective, who played in the sort of personnel management space, raised $140 million. They capped out though at 14 million revenue and sold for 14 million. So massive loss for everybody. That's obviously the downside of venture that no one talks about. So my question to you guys before I go to questions is, who is more likely to buy who? Wistia buying Dixa or Dixa buying Wistia?
Great question, Chris. I would say probably a merge would be the right word instead.
There you go. Just an even merger.
Yeah.
A bunch of politicians.
That's how you get around that one.
A bunch of politicians on stage. All right. This is good stuff, guys. Let's wrap up here with a couple minutes of questions here. Greg Dawson just asked for Chris, what percentage of average is the profit sharing for your employees' compensation, and does that affect their base salary? So talk about how you schedule profit sharing.
Yeah. So for profit sharing, we take a percentage of EBITDA that is just like that scales with EBITDA every year. As EBITDA gets bigger or smaller, like it's the same percentage, 10%. And then it's paid out like a bonus to each person. And we do a lot of work to make sure that we pay people fairly and equitably. So we like audit how we compensate folks across the business multiple times a year. We do it across like every demographic. And we just try to pay people really well. That's one of the nice things about the position we're in, being profitable, is we pay people really well. So it comes up as a bonus. So depending on the year, I think it's been maybe like 8% to like 15% or so. But we're also trying to pay people better up front because they're not getting equity. So they're not getting this thing that they don't know how to value. We don't know how to value. They know how to value what it takes, what they get compensated for to work at Wistia. And so that's how it works.
Nina Foot Mads has a question for you. What's the best thing your investors did for you besides the value of just the investment?
Yeah, that's a very good question. I would say maybe taking us back to the operational approach that our Series A investor did helped us in all the pain points. We had a lot of challenges with scaling the data side of marketing. We even had some around our platform. We had about the data processes, legal stuff, and of course a lot of the talent hiring. So they actually went in and they actually took people from Berlin and put them into our teams for 1, 2, 3, even 6 months, and that's their approach. They are very different, I would say, in a good way, operational VC. So they were almost a part of company. That also comes with everything is transparent. They know all the good things and all the bad things going on, and you need to be aware of that if you invite an operational VC. And it was a great thing for us. I think it actually made us growing much faster than otherwise.
Chris, Mads, thank you so much, guys. If you have questions for either of them, I encourage you to screenshot the slides, use the hashtag SaaStock Remote on Twitter, and those guys will jump in. Chris is also doing a private room here in a second, which Alex will talk about. Again, Wistia, Dixa, Mads, Chris, thanks so much.
Thanks, Nathan.
Thanks, Nathan. Great to see you again. Take care.
Thanks, guys. I think as Nathan said, so Nathan and Chris will be sticking around, but they'll be back on, I think, in around about 40 minutes on the session stage, taking your questions. I'm seeing the questions come in. So either like save those questions or re-ask them back when we're doing the Q&A. I think it's Negronis with Nathan, so I'm expecting Nathan is going to have a Negroni. Otherwise, I'm disappointed. Coffee with Chris, maybe a little bit easier.
A little easier. Maybe
you want to swap. What one does Negronis?
Yeah.
But thanks. Really insightful conversation. Love that. Thank you so much for being a part of this SaaStock Remote. Looking forward to the Q&As and the drinks later. Thanks, Nathan, Mads, and Chris.